right, joining us right now is former Cleveland Fed President Loretta Mester. She is now an adjunct professor of finance at the University of Pennsylvania's Wharton School, also a CNBC contributor. And Loretta, thank you. You are the person we need to speak to most at this point. Please tell us, based on your read of these numbers, whether the Fed should cut rates again.
Well, it was a great conversation, I have to say. I enjoyed it as well. Look, the Fed has a dual mandate: price stability and maximum employment. The Fed's started this phase of bringing policy rates down towards neutral. Yes, you're right. We don't know exactly where neutral is, but we do have signs that the economy is moderating. So the employment report today was a strong report, which is good for the Fed. The Fed has to balance both things. The concern over the past couple of months was maybe labor markets were cooling off a bit too much, not just moderating, but weakening. I think this report, plus the revisions from the 2 prior months, really show that, no, the economy is doing quite well on the employment front, and inflation is coming down. And so in that environment, the Fed has to be forward-looking, and you don't want to keep rates at the current level, given where inflation has come down from and where it's going in terms of the forecast. Yeah, there are risks on the upside to inflation, and you pointed out some of them, including oil prices, given the conflict in the Middle East, which may be escalating, and that's something to keep an eye on. But you have to sort of make your best policy looking at where you think things are going, and maybe you'll have to course correct in the future if things turn out differently than where you're projecting. But right now, it makes sense for the Fed to keep looking at the data it gets up until that next meeting, and then move rates down as it said it was going to do at the last meeting. It's starting a new phase to bring them towards neutral. We don't know exactly where neutral is. We don't know when the stopping point will be. But with the moderation going on in the economy that we've seen so far, which is expected to continue, and where inflation is expected to go down, it makes sense to be bringing rates down at a moderate pace. I think this report would not necessarily support doing another 50, but it is consistent with moving rates down another 25. And then, maybe they'll pause for a meeting or two.
Yeah, that would be my guess, Loretta. If you're looking at inflation, not necessarily completely where you want it, but coming down significantly, when you're looking at the jobs market being stronger than you even anticipated last month, because we not only had stronger than expected numbers for the most recent read, they revised the numbers upward for the month before. Wouldn't the prudent thing to be look around and wait and see, especially when you just came off 50 basis points when that was the most anybody had been anticipating?
I mean, you could do that. And again, they're going to have that meeting, the discussion around the table. I think it would be actually a signal of sort of stop and go policy, which I don't think would be very helpful. Look, they started in this phase. There's a lot of evidence that suggests that things are moderating. I mean, not every report that's come out has shown that everybody's hiring, right? If you look at sort of the ISM surveys and the businesses that they talked to in that survey, a lot of them said, hey, we're being, prudent about our labor force now. We can hire people. If you look at the quits rate, people aren't quitting their jobs as quickly as they were before because they feel that it's harder to get a job if they were to quit to move into a new job. So there's moderation going on in the labor market, which we want. We want sustainable labor markets. We don't want things to be overly tight, and we certainly don't want people to be losing their jobs because the Fed is too tight. So that's kind of where the Fed has to look at. It's basically balancing risk. And, in the past, you could say they had the luxury of only having to worry about inflation. That wasn't really a luxury, but you know what I mean? They had to focus on inflation.
Sure.
Now they have to look at both parts. And that's what makes this more difficult, right? The decisions are going to be difficult going forward. But they've always been keeping both parts of the mandate in view. It's kind of like if you have a panorama shot, right? You may focus on one part of the mountain, but you still want to have the valley in the panoramic shot. They always have both parts of the mandate in mind.